Hello, I am Krishna. I am back with new lesson, and today's new lesson is indirect tax. Most of the students of grade 10 are always in problem because of indirect tax. And the main reason behind is that they have not got prior informations about the taxation systems of our nations. It is the first time they have heard about tax and its types. Uh, Although this video is made for the students of grade 10, this video may be useful for the students of management as well. Now, I will be talking about what is indirect tax, types of indirect tax, VAT, excise duty, and custom duty. Under indirect tax, I will define what is it, how is indirect tax different from direct tax as well. Types of indirect tax: VAT comes under it, excise duty and custom duty also come under it. I will shortly introduce those taxes in my class today. Let me see at the next slide, and it is of indirect types of indirect tax: VAT, excise duty, and custom duty. VAT, excise duty, and custom duty are definitely very difficult terminologies to be understood by the students of grade 10 because these these terminologies are completely coming under the taxation system, coming under the financial section of our nations. I am trying my best to make the students understand what are these terminologies. Let me begin from what is indirect tax. Indirect tax is a tax which is levied on the price of goods and services. Moreover, indirect tax is levied on the person who consumes the goods and services. It is paid via third persons to the government. In direct tax, taxpayers pay tax to the government directly, and direct tax is a tax which is levied on the on the income and property of the taxpayers. However, indirect tax is not levied on the income and property of the taxpayers. It is levied on the persons who consume goods and services. From that perspective, indirect tax is also known as expenditure tax, consumption tax, and regressive tax as well. Expenditure tax, in the sense that those who purchase goods are levied by are imposed by indirect tax or are levied by indirect tax. So it can be shifted in other entities. Direct tax, we know, cannot be shifted from one entity to another entity. But in indirect tax, tax is shifted from one entity to another entity during the time of its payment to the government. It is levied initially on the manufacturers and suppliers who then pass on tax to the consumers. One disadvantage of indirect tax is that the burden of indirect tax directly goes in the hands of customers because customers is the ultimate ultimate entity who takes the entire burden of indirect tax. So evasion of indirect tax is not possible due to the direct impositions and implementations on goods and services. Indirect tax is very difficult to be avoided, very difficult to be evaded by taxpayers because they pay tax to the government indirectly, and they may not know that they have paid tax to the government because it is not seen clearly like direct tax. Let me talk about VAT. What is VAT? VAT is value added tax. VAT means a tax given to the government at each stage of the supply from productions to the point of sale. VAT begins from production and it ends to the point of sale. It is supplied from one entity to another entity. Its beginning entity is manufacturer and its ending point is customer. So VAT is imposed on the value of the goods at each stage of its supply from manufacturer to purchaser or customer. Value added tax is a tax where value is added in the value of the goods or commodities in each stage of its supply. Except customers, all the other suppliers or buyers receive their reimbursement that they have paid in the name of tax. Yes, manufacturer takes its compensations from dealer, dealer takes its compensations from retailer, retailer takes its compensation from the customers. So, except customers, all other entities they take their expense compensation or reimbursement from other entities. So customer is affected by the amount of VAT, and it is also called goods sales or service tax. Approximately 166 countries in the world have practiced VAT, and VAT is taken to be the important source of government revenue. Let me share you one more slide that is related with VAT. In this diagram, manufacturer imposes VAT on dealer. Dealer passes the burden of VAT to the retailer. Retailer passes its burden of tax to the purchaser. And finally, purchaser has to take the burden of entire VAT. And manufacturer, dealer, retailer, purchaser all are responsible to pay tax to the government. So government collects tax from the different entities in each and in each and every stage of sale. I have made one table to make students understand how is VAT included in the different entities and how is VAT paid to the government. In its in the table, stages of transaction, cost of productions and purchase, profit margin, cost of sales, VAT, selling price including VAT, and VAT to government are included. Let me explain from manufacturer. Cost of productions of or purchase of manufacturer is 90 rupees. Manufacturer keeps 10 rupees as a profit margin. After profit margin, the rate of that product will be 100 rupees. It is called cost of sales. And one important information is that VAT is always included in the cost of sales, not in the cost of production. Manufacturer has to pay 13 rupees as a tax to the government because government imposes 13% tax on the cost of sales of manufacturer, and manufacturer is uh, paying 13 rupees tax to the government. Similarly, dealer has to pay VAT to the government, and the amount of VAT that the dealer has to pay to the government is 0.91 rupees. Students must not be in confusion how is 13 percentage included in the cost of sales, why it is not 15 percentage, why it is not 20 percentage, why it is not 25 percentage. Because as per the fiscal law, there is the provision of 13 percentage VAT in our nations. So government has determined 13 percentage VAT on the different um, products, on the different products during the time of its supply from one entity to another entity. Regarding in the second case, dealer cost of purchase is 100 rupees and dealer keeps 7 rupees as a profit margin. And when the profit margin is 7 rupees, its cost of sales is 107, where 13 percentage VAT is included. And after the inclusion of 13 percentage VAT on 107, it will be 13.91 rupees. Students may be in confusion why the VAT is not included in 113 rupees, although 113 rupees is the 113 rupees is has been paid by dealer to manufacturer to purchase the materials, because VAT is not included on that price which has already uh, been added by VAT itself. So VAT is not included in 113 rupees. VAT is included in the cost of sales, that is 107 rupees. I would like to inform you once again is that VAT is not included in that amount which in which amount VAT has already been included. That is why the cost of sales is 107, and where the VAT is included, and it will be 13.91. And how is 0.91 is the taxable amount from dealer to government? Because manufacturer has already paid 13 rupees to the government. That is why 0.91 rupees has to be paid by dealer to the government. And similarly, retailer has to pay 1.3 rupees to the government as a tax, and consumer at the end has to pay 132.2 rupees to purchase something from retailer. Now, excise duty. An excise or excise duty is any duty on the manufactured goods that is levied at the moment of manufacture rather than at sale. One information that I need to give you is that, let me go back to the previous slide. Excise duty is always levied on the cost of productions. Excise duty is not included in the cost of sales. Here we can find the clear distinction between the VAT and excise duty. VAT is always included in the cost of sales, whereas excise duty is included in the cost of productions. So excise duty is a duty that is levied on the cost of productions, not on the cost of sales. So excise duty is a domestic tax. It is an internal tax and imposed on the domestic product. Nation has to produce many products to fulfill the demands and needs of the citizens. However, nation is not able to produce as many products as the citizens of that nation's demand, because of many problems. Problems may be financial, problem may be technological, problem may be the lack of human resources, problem may be the scarcity of raw materials, natural resources, etc. So excise duty in the context of Nepal is levied on three groups: liquor, tobacco, and other manufacturing items. I am particularly focusing only in the context of Nepal. So, excise duty in the context of Nepal is imposed or levied on three particular items. One item is liquor item, that includes soft drinks, hard drinks, tobacco, uh, and other manufacturing items. It is imposed on the goods on the basis of the price of the goods or volume of the goods. Uh, it is levied watching sometimes the price of the product, and it is levied watching the volume of the goods as well. I can give you an example. Suppose cement. Government imposes excise duty on cement as per the volume or capacity of the industries and factories. So, excise duty is levied um, by the government on the domestic products or on the products that are manufactured by a nation. So, let me explain what are the advantages of excise duty. It is the main source of revenue, and definitely government has set different norms and values to determine the amount of tax on the different products. So government collects huge amount of money from excise duty, and that will be useful for the nation to spend in the different areas of economic dimensions. The revenue is easy to collect. It is not difficult to collect because direct indirect tax is already imposed on the goods and services. So when purchaser or customer purchase something or consume goods or services, they have already they have means they need to pay tax to the government. So mm, uh, customers, they don't know that they are paying tax to the government. They are paying tax to the government unknowingly all the times, and they don't know that they are paying tax to the government. In direct tax, there is a realization of paying tax to the government. However, in indirect tax, there is no realizations at all in the psychology and mind of the taxpayers that they are paying tax to the government. No possibility of tax evasion, as I have already said in the previous slides. Evasion of evasions of tax in indirect tax is not possible because of direct impositions and implementations on the goods and services. It discourages the excessive consumption of alcoholic and product of tobacco. Definitely, government is imposing excise duty on liquor and tobacco items in the sense that government wants to minimize the customers of those products because those products are injurious to health, and they are the main source of different disease. That is why government discourages uh, uh, customers not to use those products which are very detrimental from the perspective of health. Tax collections cost is low. These are the advantages of excise duty. And today, the last slide is custom duty. It also comes under indirect tax. And custom duty is a tax imposed on the exports and imports of goods. Moreover, it is a tax levied on the value of goods when they are transported across international borders. Let me explain these points more minutely. Nation does not produce all those products which are demanded or required by our customers or by our citizens. So government purchases many products from international countries, from neighboring countries to satisfy the demands and needs of the citizens. In course of buying or purchasing those materials from in neighboring countries or international countries, government imposes tax on them. The intention of government to impose tax is to collect revenue from the citizens on the one hand, on the other hand to satisfy the needs and demands of the citizens. Some of the citizens of the nations can have enough capacity of purchasing. That is why they are always in the sorts of luxurious items, and they are dependent on nation for um, purchasing those luxurious items from neighboring or international countries. So government takes advantage from importing those goods and commodities from international countries. The rate of tax under custom duty is country specific, as countries as per their fiscal law determines the rate of custom duty. How is a country imposing custom duty on imported goods? It is the matter of curiosity among the students, but there is no any international uh, norms and values that determine the percentage of custom duty which is going to be imposed on the imported items. Uh, it is country specific, means it is an authority of the nation to determine how much percentage is applicable to be imposed on those goods and commodities. In the advantages of custom duty is that it protects domestic industries and encourages domestic products, because when there is an imposition of custom duty on imported goods, the rate of those goods will be very expensive, and people of low income, average income may not afford or may not buy those expensive items. They buy domestic items instead of buying the international or um, external products. So it definitely protects our local industries, our domestic industries, and it also encourages people not to use international products, because international products are always expensive because of excise duty, and it is also the source of government revenue. So government collects enough revenue from custom duty. That are the advantages of custom duty as well. Thank you so much.